Is Snowflake a good company to invest in? Well, let's find out. I'm Jake Invest. Please like and subscribe. Okay, so Snowflake, it says it has a high of $556 and a low of $110. Okay, so I think that this forecast, I don't really believe that this is very accurate, because Snowflake is losing money hand over fist. So they think that in 2022 they're going to have a positive EPS, but I really don't know or think that is going to happen. Now, they might make more revenue, that is possible, but it doesn't seem like they're doing any better for them to have a positive net income. Their net income is going down. And if you look here at their net income for the last 4 years, every single year the net income becomes worse. It becomes more unprofitable than the last year. And their profit margin is negative 55%, and then all the way from negative 184%. So if you actually look at this, it seems like it is getting better from the profit margin standpoint, which is a good thing to see. And then their revenue, which is doing extremely well, is going up insane. It's like doubling every single year. Pretty much, yeah, they're doubling it. So I don't think that this is a sustainable amount of doubleation. Because, you can't double your revenue every single year for the rest of the eternity. But they're also doubling their negative income. So the more revenue they get, the more money they lose. What I did see that was good is that it has cash. But eventually, if they keep losing all this money, they're not going to have cash. Because if you look at their operating margin, it's negative 58%, is the percentage of revenue left as operating income after subtracting the cost of revenue and all operating expenses from revenue. They are left with no operating margin. So they have $6 billion in total assets, $1.6 billion in liabilities, $200 million in debt. And then their net cash to debt is $3.6 billion. So they have cash, which is good. They can cover their debt. Now, they could keep going into debt because they have to pay Amazon to host their cloud services. Oh yeah, and by the way, Snowflake provides a cloud-based data platform in the United States, internationally, offers data cloud, and a whole bunch of other data things. So you think, okay, so Snowflake, they probably have a data warehouse somewhere that stores all of this cloud data. No, they pay Amazon Web Services to host their cloud platform. So every time you buy, or every time you put stuff into Snowflake, let's say you got a website and then you run it off of Snowflake or whatever, or you put pictures on, if it's like the cloud, then you're pretty much just putting it onto the Amazon servers, not from Snowflake. So everything on Snowflake is built on top of Amazon. So Amazon is the weight that's holding up Snowflake. And here's the problem. So what the bears say about Snowflake. The bears will claim that Snowflake cloud-based warehouse platform, which pulls data from multiple computing platforms and centralizes the results for third-party services, isn't as disruptive as it sounds. It's not a disruptive company. Amazon's Redshift, Microsoft's Synapse, and Google's BigQuery all provide similar services. More importantly, all three tech giants integrate their data warehousing services into their own cloud infrastructure platforms: Amazon Web Services, Microsoft Azure, and Google Cloud. There goes Google, always freaking popping up on my phone. I didn't say the first word and then Google. I just said Google. Shut up. Snowflake doesn't operate its own public cloud platform, so its services actually run on AWS, Azure, and Google Cloud. Therefore, Snowflake is actually paying its competitors to keep its own service online, and those competitors could eventually hike Snowflake's cloud hosting rates while undercutting its prices. That's troubling because Snowflake's revenue growth is gradually decelerating and its net losses continue to widen. Snowflake's lack of profits forces it to rely heavily on big stock bonuses to subsidize its salaries. So if you look down here, another tech company diluting the shit out of their shareholders. Okay, this company dilutes their shareholders hand over fist. So in 2019, they started with 45 million shares, and then in 2021, they have 300 million shares. This is what I hate about these companies. You can't just buy a stock and not worry about them taking away from you, right? They just steal from you by doing this. Before I owned 10%, now I only own 5% of the company. They do it to pay their employees, and I mean, that's a part of investing because you're investing for the future of the company. So they're gonna use your money to pay themselves a bunch of money so that, they can run their business. They're trading at 34 times their price in the future. Their PS ratio is 34. They don't even have a PE ratio because they're unprofitable. But for some reason, BlackRock increased its stake in Snowflake by 9%. BlackRock owns 9.6 million shares valued at $3 billion. Capital Research now owns 6.8 million shares. Jennison Associates own 4.6 million shares. State Street Corp owns 4.3 million shares. I don't know why these huge companies are buying so many shares into Snowflake, because I just don't see the reason to invest in this company, right? I would rather just invest in Amazon because Amazon's going to take over Snowflake. Amazon already has Redshift. Redshift is a data warehouse product which forms part of the larger cloud computing platform. It's built on top of technology from the massive parallel processing data warehouse. So Amazon at any point, they can freaking take over Snowflake. And then Google, they already have a cloud. And then Microsoft has one, I guess. But everybody uses Google Cloud, right? So Snowflake got like, what, 6,000 companies using them. And then Amazon probably has billions and billions. They even have Snowflake using them. And then they have every single app using them. Every single platform. Any of them other stupid little websites use them. Everybody uses Amazon. Amazon's going to take over Snowflake. And not only that, but since Snowflake is using Amazon Web Services, Amazon can see everything that Snowflake is doing. And then they can just write down everything and then copy all of it. Charge Snowflake $2 billion to use their platform, and then just run them out of business and then take over everything. Snowflake is super risky. I don't think I would invest in them. They're unprofitable. I don't really see them ever becoming profitable anytime soon. So I'm just going to stay away from this company because it looks like bad news. Now, I could be wrong, and the company could blow up to $500 a share in the next year or two, and I'll be completely wrong. Okay, it could 5x, whatever. But I think I'm just gonna be one that misses out on this opportunity because I just don't really see it. All I see is Amazon or Google taking over them. It's kind of hard to build a startup data cloud company whenever you have huge companies like Amazon and use their platform, right? They should take their billions in revenue and then make their own database. That's all I say. Because if they don't build their own warehouse and database, hard drives, and all that shit, they're going to be like screwed and they're going to be relying on Amazon. I just don't get it. At first I was like, oh shit, another company that has their own database. That's what I thought when I first looked at the company. I thought they had their own thing like Amazon and Google does. They all have their own warehouse of hard drives that hold all this information. I thought that Snowflake would have that too, but they don't. So, oh, and by the way, this is a green screen. Oh, and if you have any recommendations of any stocks that you want me to talk about, comment them down below, right? Leave a comment and like and subscribe. That would be awesome. If I miss out on the gains, whatever. There's other companies out there that I can make money on, like Amazon. If you have any comments about this company or you disagree with me, leave a comment as well. Have a good night. Peace.